You're running full speed, but the markets are faster. Quasar Markets Live brings the world's top financial minds to you. Everything you need to know in one place. Learn from elite educators and gain a competitive edge, leveling the playing field for you. Join the conversation. Quasar Markets Live.
Good morning, Quasar Markets Live. Howard here with your pre-morning prep. It's Wednesday, February 18th. We're about 60 minutes out from the opening bell, and the market is giving us a lot to digest this morning. If you're looking for a clear direction, you might want to grab that second cup of coffee because the tape is telling a story of two different worlds so far. So let's start to break it down. First, let's take a look at what we call the heart monitor of the industry or of the markets, right? The VIX, the volatility index, currently sitting just below 20. It is down a couple of percentage points this morning. But again, don't let that fool you. It got as high as, 23 yesterday, and we know that it can move any given day. Yeah, it got as high as 23.10 yesterday. So traders are on edge a little bit. You can see it in the bonds. The 10-year treasury here is at about 4.075, basically pinned towards the floor of its 6-month range. Why? Because everybody is staring at the clock and waiting for 2 p.m. Eastern time today when the Fed minutes drop. Until then, we might be in a bit of a semi-holding pattern today. We did just get some economic data out, some December building permits, some of this stuff. They're breaking it all down on CNBC and such now, but we'll look at that in a little bit. Let's take a look at what's going on with commodities. We do see a little bit of a spike in oil. That's a little bit of the real action we want to keep an eye on. Why are we watching crude right now, Quasar? Because geopolitical tensions, right? We got off to a fresh jolt of adrenaline. Vice President J.D. Vance basically told Fox News that military action against Iran remains on the table after talks in Geneva stalled. When those war drums start beating, the safe havens shine. So we do see gold and silver catching a bid here today. Gold back at 49.62, up almost 2%. And silver now up above 76 here, up 4.5% almost today. So we are seeing a run towards that. If we look overseas, it's been a strong day across most of the markets, from the Nikkei to the Hang Seng to the stocks, all up about a half a percentage point to a percentage point there. And if we keep an eye on the dollar, it is inching up, but not by any means overextended here at 97.28, where it starts to weigh. So a lot of the different mappings we look at to decide whether the market is green or red, risk on, risk off type of day, are sort of falling into the risk on atmosphere, except for that gold and silver running. It seems like it's a day where everything is moving up in general, because when we do look at the indices, the Dow Jones is up about 26 basis points here, 49,740. The S&P up 41 basis points, right around 68.88 so far. And we do see the NASDAQ is the leader so far, slightly up a little more than a half a percentage point at 24,895. So it's big tech. It's the NVIDIA world, and we're just living in it, as we can see, because what has the markets buoyed today? NVIDIA up over 2%. Meta just announced they are buying millions of NVIDIA's Blackwell and Rubin chips for their data centers. It's like a digital's arms race, and NVIDIA is selling the main ammo, right? And that has chips moving today, not just NVIDIA, but most of the chip sector in general was moving up earlier today, and we do see NVIDIA up 2%. Sympathy plays or other plays in the area up nicely. ASML up about 1.8%. TSM, Taiwan Semiconductor, up almost 90 basis points. The two that are under a little bit of pressure today are AMD, which is down about 2.3%, and Broadband's down about 75 basis points there also. But also nice moves up by Qualcomm, Applied Materials, ARM, Micron, Analog Devices, although we'll get into that on the earnings part of the show. Had a nice little earnings beat, up about 5.63%. But again, chips do seem to be catching a little bit of a bid here. Other things I saw interesting in the news today was that our Oracle of Omaha, in his sort of last moves, they took a $350 million stake, Berkshire Hathaway, in the New York Times. So a little bit interesting. Meanwhile, he's trimmed back on Apple and Amazon. So classic Buffett move, you know, sort of a feint and a left cross as he crosses the door and heads out and puts it in Mr. Abel's hands. So we'll see how that turns out. And for the EV fans in the room, Tesla, although only up about 27 basis points now, was doing better earlier. Elon actually hit a deadline. The Cybercab production has officially started in Texas. So mark your calendar. Those robo-taxis are coming to a city near you by April, it looks like. Let's take a look at some single ticker names here now that we sort of set the tone. Garmin having a really strong day here, up about 15.5%. They didn't just beat earnings, they blew it out of the water. Let me pull up. I got to grab that for us here. There we go. And their spike, as I said, their stock spiked in the pre-market Wednesday after the maker of smartwatches and your GPS units posted strong fourth quarter earnings, and they issued an upbeat forecast for this year. They came in with quarterly adjusted earnings of about $2.79. That was above the $2.40 street estimates out there. And they did come in with revenue at about $8 billion, basically. So sales surged about 11% in the year. So strong little move to the upside so far. It is having a pretty good day. And one of the leaders, if not the leader right now, I think it might be the leader. Oh, that's why. Why does that not work? Okay, it doesn't like it. Wow. There we go. Now it's working. Man, that was weird. Garmin is the leader in the clubhouse right now, up about 14.76. Another name I mentioned earlier is Analog Devices. They are having a strong day also after their earnings. The chip maker reported better than expected fiscal quarter earnings and issued strong guidance. From my hometown there in Massachusetts, company posted earnings of $2.46 a share. They were supposed to come in about $2.31, so a nice little beat there. Company reported year-over-year growth across all ends of its market in the first quarter, led by its industrial and communication segments. Stock, as we said, up about 5.5%. They expect revenue of $3.5 billion. So again, they make analog chips for a variety of consumer and industrial uses, and are having a strong start to their year. So analog continuing to move to the upside here today. Other ones that are hitting sort of the news or that have been moving around today pretty well. Also, I mentioned NVIDIA already. There it is. Okay, so other things moving so far. Palantir having a good day. Up about 3% here in the pre-market. That was after Mizuho upgraded the shares of the company to outperform and gave it a $195 price target. They said the Palantir is in a category of one due to its revenue growth and margin expansion, which are unlike anything else in software. And we know they've been under a lot of pressure so far throughout this year. They hit a high of 207, now trading down at 133. So looks like some of the analysts, some folks out there deciding to buy the dip on Palantir. On the other side of that, earnings missed last night by Palo Alto, down almost 10% in the last two trade, or between yesterday's trading session and today's pre-market, down at 151. Again, this is another one that hit a high of 223 back here in October, now down at 151.37. They reported strong second quarter earnings, but forecast that its profitability would suffer in the second half of the year, likely on high memory prices and the cost involved in integrating two of their latest acquisitions. So that has them in trouble. Also, the another area that's under a lot of pressure today is the storage area. SanDisk fell about 3% today. Again, another 5% yesterday. So almost 9% in the last two trading sessions after their former parent company, Western Digital, said it planned to sell shares in the flash memory supplier. SanDisk announced a $3 billion secondary offering of its shares. Before the offering closes, Western Digital is expected to change the shares for some debt held by affiliates of JP Morgan and Bank of America. So that has SanDisk down. It did have Western Digital up earlier. Let's see if that's still the case. It is still up about 1.67%, but that was weighing a little bit on the different areas there. Another name that was getting good news so far this morning was Cadence Designs, which is a chip design software maker. They beat their analyst targets. And they came in with adjusted earnings of $1.99 a share on revenue that was up 14%, beat both analyst estimates on that. So they definitely are looking good for the full year. They posted adjusted earnings of $7.14 a share. Again, that beat street estimates, and their top line revenue for the year was just about $5.3 billion, up versus the FactSet set 2. They are one of the two leaders in supplying software and hardware to speed up chip design. The business is seeing increased relevance as many companies, both large and small, are designing new chips for AI computing. So their customers and partners are the who of chip makers, from NVIDIA to Apple to Taiwan Semiconductor. And their CEO mentioned that strong customer demand for their expanding AI-driven product portfolio and the essential nature of Cadence's engineering software position us well to capture the massive opportunities of the AI era. They'll close 2025 with a strong finish and broad-based strength across the business sectors, including adjusted operating margin of about 44.6%, reflecting continued productivity-driven profitability improvement. Also, with strong fourth quarter bookings, they are beginning 2026 with a record backlog of about $7.8 billion and excellent momentum. So that does have the chip sector also moving in the right direction. So as I mentioned, a lot of the movers this morning are in that chip sector. We do see another sector that's getting some love today is the low Earth orbit stuff. Fly, FLY, up about 1.67%. AVAV, AeroVironment, up about 1.5%. And Rocket Labs also up about 1.8% here. And Rocket Lab is getting set to test their next hypersonic test mission. So that could get even more good news happening there. We'll mention the president's company is looking pretty good today. American Bitcoin, ABTC, up about 1 percentage point, and DJT up about 1%, although they are dropping down a little bit now from highs of the morning. But those were another area that was showing some strength earlier here. We do see some of the miners that have been moving up here overnight too. Some names that I have here on the watch list: HYMC, Hotel, Yankee, Mike, Charlie, up about 5.27% here as metals catch a bid. That also had USAR moving to the upside, TMC moving to the upside, a few of the other names in that sector. Speaking of which, let's take a quick look through the different sectors of the S&P to see what is happening there. And we can see energy had a strong start to the day yesterday. The pre-market was the sector that was up the most, but actually ended up being one of the laggards on the day. Right now, it's up about 1.12%, and that's been a mix. There's some nuclear names that were moving up. I saw that NNE up about 1.66, the nuclear energy play. So that was the only name I saw that was moving tremendously one way or the other, but energy catching a bid so far. Utilities are fairly flat on the day after being fairly flat yesterday. Material sector had a rough day yesterday, down about a little over 1%. Today, trying to rebound about half of that back so far. Technology rather muted. It finished yesterday down about 6 basis points, up about 37 today. So not a clear direction there, and a lot of that's being driven by the earnings, hits or misses. Looking at consumer staples, they continue to slide after having a rough day yesterday, down about 1.5%, down slightly again today. We do see consumer discretionary bouncing back today after having basically a flat day yesterday. Industrial sector continues to show strength, so that's a sector is one of the only sectors seeing 2-day growth. We have industrials and financials doing that. So financials, after a strong day yesterday, still up again today. So that's what we're seeing so far. As we are about 35 minutes from the open here so far. Just seeing if there's anything else sort of hitting the news here. Not really anything new. I mean, most of the talk, and we'll get into it with BigBeat, the things I'm going to ask him about today is Amazon, and, is that slide finally over? What has Warren Buffett done on his last steps out the door? What does he think is going to happen here? A lot more to digest in the Warner Brothers Discovery sale. And, is tech finally going to start to catch a bid here, and software a little bit? As we know, those sectors have been beaten down over the last several weeks. Will some of those bounce back today as we're looking at it? From a crypto side, not so strong. We are about the same level we were yesterday at this time. But again, continue to see lower highs and lower lows across both Bitcoin. Ethereum doesn't have a lower low today, and it actually hit a higher high, but still looking weak. Not much there to talk about on a bigger level. It just seems to be, a lack of spot buying that just keeping us from moving back up to those levels we're looking for. 2 o'clock, we do have FOMC meeting notes will come out, so we'll see that then. Mr. Flanagan, that's a great question. I do think we're towards the end of the drop, but it's how long it stays there. It tends to have a 3 to 6 month area where we'll just sort of move and consolidate sideways. Need something that's going to bring strength back. We did have some talk yesterday. There was a weird purchase of IBIT from a Hong Kong entity using basically John Smith as the name for its SEC filing, the equivalent of the Chinese John Smith. And a lot of folks implying that Chinese money is going to flow back into crypto through the ETFs because there is sort of a workaround. And while they're not supposed to hold Bitcoin in a spot, because of the recent changes in rules, they can access or gain access to IBIT. To me, that's a bullish, bearish statement, because it's great right now while they are buying it if they do. But at some point, we know China has a great history of banning Bitcoin or access to it. And it usually has been actually at the top. A lot of times they have led to the start of a bear market. So, what they bring up, they tend to bring down. So that's the only thing that worries me there. But again, if we actually do see institutions in China that are moving into Bitcoin, it would be big. That would be ETF inflows. You'd be looking for something, over $100 million a day in Bitcoin ETF inflows. If you start to see that, that gives you a direction there that that's actually happening under the surface. And that would be extremely positive in general. So we'll see if that plays its way out. It isn't in the market so far. Right now, it's really just a lot of liquidations of perpetual futures moving us up and down, while not much backs up the price on the spot market. So a lot of things being built, though, under the surface, a lot of connections. We've had BlackRock is issuing or they connected with Uniswap, the decentralized exchange, and they're going to allow people around the globe to purchase their U.S. Treasury fund BITL through a decentralized exchange. So they're trying to tap that liquidity. We saw Apollo invested in Morpho, a perpetual future platform that is, they're trying to connect and figure out the workings of these different blockchain technologies as they get integrated into the SEC and CFTC systems. As we know, that stuff's moving on chain. So what we see under the surface is really good. A lot of companies from the TradFi, the big names, are partnering with crypto entities to build this out. So we'll see how that goes. Yesterday was a good one too, Brian Armstrong. There was some fears, or there was a lot of rumors on the internet yesterday that, these Bitcoin ETFs were, as BigBeat calls it, just paper Bitcoin, but they are not. You actually have to have the Bitcoin, and Coinbase custodies about 80% of the ETFs Bitcoin for them. So they actually hold the underlying asset. But for some reason yesterday, that seemed to hit the Twitterverse and had a lot of people chatting back and forth that it was just sort of, that's how the gold market, as we know, gold is paper gold. It isn't, there isn't enough physical gold to fill the orders. In the case of Bitcoin, there is. So again, a lot of things under the surface look good, but price still depressed, and, fear and greed and apathy mean just not enough volume to move the market. Let's run his intro and get him in here to start off our hour, the main man himself.
When markets move, Stephen E. Orr takes the chair. From the White House to Wall Street, he's spent decades at the intersection of policy, markets, and real capital. And he's seen firsthand how institutions use data behind closed doors. Now, as founder of Quasar Markets, his mission is to pull those signals into the open so everyone can see what really moves the markets. This is Stephen E. Orr, BigBeat on Wall Street. Let's filter the future live.
BigBeat, how are we doing this Wednesday, my friend?
Good morning, Howard. Look, this morning I was feeling pretty good. I thought that the Qs were going to push here, and of course, all the news about Iran is picking up now. And look, let's be honest. I've been through a lot of this, and I can tell you that no buildup of this size has ever gone through, and a war has not happened in the history of the country. So we're going to war with Iran. I don't think anybody can say anything against that now, and we're doing it. So We need to think about that and plan for that. And you can see that oil has jumped from $62 this morning to 63.88, almost $2 here in the early pressure morning here. Now I call it the pressure morning. That's old school. Sorry. What that means is that there was a buildup of shorts in there that pressure just all the way pushed it up, and then with the news, it went right through the numbers. So we are going to war, and we need to think about that. But it doesn't necessarily mean that the market's going to crash. We just need to have a little more clarity, and that's what we always say, right? Clarity, clarity, clarity. So give me more clarity, and I'll be able to tell you exactly what's going on here. But right now, I don't have any clarity. I don't know. Khomeini is screaming about how they're not going to allow more inspectors to come in. They want enrichment, yet they're going to stop it. I don't know. It's nuts, right? So it ain't going to happen. They're going to go to war, and Khomeini thinks he's going to blow up 2 ships in the. Okay, you blow up 1, you're going to get 10 more. You grab the bull by the horns, you're going to get the horns. I mean, you're going to get the horns. So I don't know what Iran is thinking right now. The problem with Iran and going to war with them is they don't forget. I mean, they're still pissed off. They're still pissed off at Iraq over 2,000 years. So, are we really making the right decisions here? I don't know. I mean, I can't answer that question. I don't have the exact same docs that the president does, but I can tell you, if you're going to do it, don't screw around. Go blow them up. Get it done. You know.
Yeah, and as J.D. Vance, the vice president, said, he said the president has some red lines that the Iranians are not yet willing to actually acknowledge and work through. They won't even sort of talk about them at the negotiating table. And Iran sent that veiled threat, carrying out military exercises in the Strait of Hormuz. Like you said, it's poking the bee's nest, whatever you want to say, the hornet's nest, is not a good idea, especially with our commander-in-chief right now. So it does look that way. I mentioned it in my morning watch list that, that move up in oil and move up in metals again is sort of signaling what the world feels about it, right?
Yeah, I mean, here's what's very interesting. We've now got a more of a buildup now in the amount of cash on the sidelines, right? That people are nervous. I would not be short this market. I mean, people cannot wait to get back in. And they're just, every time you see a push up, there's some selling pressure going into that. And we know that, right? We understand that institutions. But institutions are starting to not really have as much power as these algos do that are now being written by every Tom, Dick, and Harry on the street. And yes, the algos, I'd say almost 80% of the algos are screwing up, right? And they're causing people money. And that's a problem. I understand that. But that's a lot of cash. I mean, it was almost $8 trillion in cash on the sidelines and money market funds. Holy moly. I mean, if a tenth of that came back into the market, we'd be at all-time highs again. So I would not, being short the market takes some real serious balls right now. I understand why there's a lot of bad news out there, but if all this bad news is in the market and the market is still sitting here, wowzer.
Well, and as you just said, what money is on the sidelines is actually retail money right now. Hedge funds are at almost all-time allocation highs, and private equity. So they're not scared right now. Retail is scared. But here's the other part of that. Do they rotate out? What happens if they rotate out? What if they do get spooked by this?
Well, they are. I mean, look, here's a good example of this. And I've been buying Amazon stock. Amazon has had the biggest sell-off since 2006.
Oh, yeah.
Okay. 2006. Why are people scared to buy when things are getting beaten up? That's just the psychology of the markets, right? And that's what happens when things are really high. Everybody gets excited to keep buying, and they get screwed because institutions dump on you, right? Because they know when to sell. They're not. There's no emotion to them, and that's what I've had to learn over 35 years is get rid of the emotion in my trading, which has made me who I am today. But here you go. And these emotions are back in it. Oh my God, AI is going to take over the planet, and I got to get out because this company's not getting AI. Well, Amazon? Amazon's leading in AI. I mean, they are the cloud company behind the whole thing, and as well as an investor in Anthropic and Claude. I mean, you think that?
Yeah. And for me, it's been NVIDIA. Finally, woke up today because now all of a sudden people realize they need NVIDIA chips and NVIDIA, Blackwell and Rubin. We've been saying they can't fill their orders. Well, again, the common sense stuff is, when that was down at 170, right? I kept saying this doesn't make sense. You're going to need NVIDIA. I don't care how big AMD
and when
gets.
Howard, when things don't make sense in your head, it's probably because something's wrong, right? And you made the right choice. You made a buy, right? That's the difference of a good trader and a damn good trader, right? Is that you're not thinking the way that the narrative is being forced down you. You're creating your own thesis, your own narrative, because you understand the markets. You understand that world. And that's what I try to teach all the time, is that if you are a bartender, if you are a plumber, if you are a homemaker, whatever you do, take that to the advantage. My God, you have massive advantage over people. And that's
Peter Lynch's wife gave him his biggest win, right? Legs.
Haynes pantyhose, yeah.
That's not a lie. It's right in the first chapter of his book, and a book everyone should read. But NVIDIA. But I've got to ask, before people start just looking and buying what's beaten up, not everything's going to win in this. And I do think Microsoft is beaten up for a reason, because software subscriptions are under more and more pressure, right? Are you going to use Word as much now that you can use your chat to write up your stuff for you? Are you going to use Excel sheets as much? So I do think you have to be careful, even with the biggest of names, because not everything's the same, right? Even though they're the Mag 7, and pick and choose the ones that you think are, undervalued or versus overvalued.
That's a really good question. I've noticed for some reason, I had to most of you don't know, I have 16 screens around me, right? And I've got another, I just put another, my 17th one just put up because I have a laptop next to me that I hadn't been using, and I need another screen. So when I put the screen up, I noticed that Adobe was in almost everything that I was touching, like trying, we'll GPT this for you. We'll make this article better. And I write a lot of articles. So I was just like, no, I don't want you to do that. How do I get it off? And the only way to get it off is by deleting Adobe PDFs. And I can't do that because I got PDF. That right there is sticky, and I don't like that. And that's going to make people pissed off. And I'm already there with it already, because I have my GPTs that I like. I like Perplexity, and I like Gemini, and I definitely like ChatGPT, the new version, and I like Claude. But you're also seeing, interestingly, on the AI side, you're also seeing things like ClaudeBot, right? And it's terrible. It's absolutely disgustingly terrible. I've tried it 100 times. It just hallucinates, like almost all of them. It will get better. I understand that. But the sheer amount of pumping that's going on in Twitter is just asinine, and all bots, and there's no real people that are in there. They can't answer questions, right? And all of a sudden you're starting to see where the pump is happening, how the marketing side of all this is happening. And that's even needing more energy, and that's needing more space. It's taking a waste. It's a waste, right? So when I look at this next generation of AI, it's going to have to be a combination, right? It's going to have to say, okay, you know what? Suno is really good at music, and Sora is good at, and Grok is good at, and this is good at, and that is good at. Let's get one that's really good, and that's the one that's going to win. Oh yeah, you don't believe that? We'll just ask Amazon. That's how they did it. Ask Facebook. That's how they did it. They got several Instagram and Facebook and all the things. Oh, I don't use Facebook. Well, I use Instagram. I don't, because I got you in all of it, right? That's the ecosystem. So I think this is dead right. And I want to be involved in those companies that are the picks, axe, and shovels of the AI, not just what company I think is going to win. I don't know who's going to win. Nobody does. I don't even think the companies know who's going to win.
It's interesting, not to get off subject, but on data centers, it's going to be an interesting next 2 years in where I live here in Ohio, where there's a lot of data centers trying to be put in. A lot of money just came in from Japan. That's where it's going into Ohio here.
Million, right?
Yeah. And all of these things because of the fight over water. It's a huge concern because there's a lot of misinformation. It reminds me a lot of the Bitcoin mining days. And what I've pointed out many times is, I don't know if it's still the case, but up until about 2 years ago, we spent more electricity a year on Christmas lights than we did on Bitcoin mining, but I never heard anyone say we need to shut off the Christmas lights. That same type of mentality has to come with data centers. It is going to use water, but a lot of them now are liquid cooled in a closed environment. It isn't the huge evaporators that the old data centers are. As you know, Steve, you're in this business. Now everything is combined, and it's got glycol, and it's this whole chip cooling systems, and they don't work the way they used to. So the water is going to not be as big of an issue. It's how long does it take for that message to get out is going to be interesting, because I do notice, as in my area where they're thinking about a data center, they're fighting it out in the news.
Two things that we need to live: air and water.
Yeah.
Third thing is food, and the fourth thing is shelter, right? It's very basic stuff, and people don't want that. I understand that. But there was the same argument about Walmart back in the day. Don't put a Walmart in my area because it'll take up all the water. Well, it didn't really work that way, right? Look, you're drinking Indian pee already. You're drinking dinosaur poop already. Stop. Water is water is water. It's been used in this country over and over and over again. And right now we have the cleanest water we've ever had. Now, do I want to see dirty water? Absolutely not. Do I want to see this administration roll back regulations? Hell no. But to argue that they're going to take up all the water, there was a big question mark in Las Vegas about water from California, right? The California was, and now the Hoover Dam, yes, it's down. The water's down in the Hoover Dam, but water's back up a little bit. Now it has the most water they've had in 30 years. So all of a sudden, water issues became an issue today, but it's an issue tomorrow. I don't know the answer to that question yet, because each area where they're putting these data centers are different. But there's a reason why they put the data center there, because it's near the companies. A huge data center in Seattle, Washington would make perfect sense, right? Because why? That's where all tech is. A data center in Texas makes sense. Sunshine Oil makes sense, right? So let's make sense of things. Pittsburgh, Pennsylvania. Why Pennsylvania? Because 3 Mile Island. Microsoft is going to put a data center there because why? They're restarting the nuclear energy there. These make sense to me. So when you look at those areas, yes, water's an issue. Yes, clean air and clean, data centers, but they also employ people, right? So there's a lot of factors that go into that. And to say, well, I don't want you here because you're going to affect my water. Are you going to pay bills? Are you going to pay the taxes on this stuff? Data centers are going to pay you you'll have more water than you need. They'll probably pump water in and still make money off. They'll probably make money off pumping the water into you. So, and we have not built enough desalinization plants. I've said this a billion times. The most water on the planet is literally sitting in the ocean. And we know how to make desal plants. They're expensive, but guess what? Data centers are going to pay that bill. So,
Exactly. And as you said, it's going to be these SMRs. I think everyone's missing the point. Is all the data centers they're saying they want to put online, they can't do that right now. We don't have the energy to do it the same way we can't have everyone drive an EV. We don't have the electricity to do it, but we are building out that infrastructure as we talk. And that's the key. Maybe be looking at these picks and shovels like you've talked about over the years that build this stuff out, that's putting fiber optics, right? Didn't we just see Corning take off last week because no one realized they make all the fiber optics that is going under the ground that's needed to move this data? Who does copper stuff? Again, they've talked about the miles of copper. Yeah, the miles of copper that are needed for each data center. So as we look at the charts here, Steve, we do see green across all 3 indices here. Yesterday was an up and down day. We have FOMC meeting note at 2:00, right? We'll get the red line. Is everybody waiting for that today, do you think? What do you think
they're waiting on one thing. They're waiting on the inflation numbers, and they're listening to what the Fed has to say, and the same narratives are still being pushed around. Industrial production now coming at 0.7% versus 0.4%. So industrial production actually way better. Manufacturing capacity pushing them just a little bit here. It does beat the expectations though in January. So for those people who are thinking that we might not have a good, I'll push this up here, good manufacturing, I think that they're wrong. I've said this. I think manufacturing, we are not a manufacturing country. We are a a country that relies on people and restaurants, and we're a service industry country. But manufacturing is what the president wanted, and he's getting it. So is it at the speed that he wants? No. And right there, you'll see mining down 0.2%. We're expecting minus 0.1, but utilities up, right? And that's what the Fed's looking at. Capacity use. We're still not quite there at capacity use. We still have the ability to manufacture more. So yeah. This morning,
okay, well, I see we got our main man when it comes to forex ready to come in. Stephen Flanagan, how are you doing this Wednesday, my friend?
Good morning, guys. I off last week, doing some conferences, and wow, did I miss a lot. But you know, I gotta say, Steve, following you right up on that comment, what the heck is the Fed watching?
Yeah, what's Fed watching?
I don't know.
All right. I got a little thing I wanted to just.
Before you say that, Steve, let me say this.
Go ahead.
I got in the email, and as you know, I'm a Fed person for the Atlanta Fed. And I got a new questionnaire asking me about the new Fed governor in Atlanta, and I got a questionnaire about how do I feel about the economy, and what am I looking for in a new Federal Reserve? What am I looking for? I don't know. Honesty. I don't know. Tell me what's really going on. Community involvement. All of those things. So before you go into that, Steve, put it all together. You've had a great week. I'm gonna let you go. I'm gonna let you do your thing. You've had a great week. You've got your ear to the ground with other people. The Fed. I'm gonna let you go.
Well, you know, here's my big point, Steve. You know, look at, you're getting that survey. You know, the Fed has a dual mandate. And let's just look at that dual mandate right now. They said a strong labor market over the course of 2025, the entire year. A strong labor market was anchoring them, and they didn't want to move too quickly on lowering interest rates because they didn't want to see wage inflation. All right, that's wrong, because the new labor that just came out, the benchmark revisions, show an anemic 181,000 jobs during the entire 25. That is horrendous. In fact, that's almost bordering on a recession type number. Number two, their dual mandate, inflation. We keep hearing about chasing the inflation ghost. Well, inflation came out, Jan CPI 2.4%, almost bang on their 2% goal. So where is that? So the dual mandate that we have heard, keeping in mind, in August of 25, Jay Powell got up there and said the labor market is near maximum employment. What? What data is the Fed using? I'm not criticizing that Jay Powell. What I'm criticizing is the data sets that these guys are looking at is absolutely irrelevant and has been proven incorrect. So, gents, you just got a survey, Steve. I hope everybody gets a survey so that they can feel the sting that everybody is feeling down here.
Yeah, Steve, I mean, it's exactly what I said. You need better data and less academics. It's pretty much what you have been preaching, and that's pretty much what I wrote. I wrote that knock off the academic side of things. I understand that you need to have a good, clear understanding, but academics should be secondary. We should think about history secondary. We should think about new data, because data is coming in faster than it's ever come in before, and the changes are coming in faster. I've heard this so many times, Steve, over the last 2 weeks. I didn't really expect AI to move this fast on my company. I did. In fact, I'm telling you right now, I think it's going to be even faster than you think. I think it's even crazier. And if I'm hearing that from CEOs of companies, what is the Fed hearing that doesn't even see any of this, right? And that's what I think.
That's the point, Steve. And I'm gonna take this into my foreign exchange, my macro view, and I'm gonna expand it. Is it just the Fed, or is it the central banks? I'll back that up.
Oh, yeah.
I want to back that up. The ECB today, overseeing Europe, UK CPI inflation, that's Bank of England. So that's a third central bank. January CPI minus 0.5%, now only 3%, coming down from 3.4 in January.
Yeah.
French CPI minus 0.4 in January, and now at 0.4% on the year. I thought 2% was our goal.
Yeah.
In other words, Steve, the
Yeah.
point I'm trying to make, have we really escaped the clutches of deflation? Are we not moving into a period of disinflation? Look at China, just to give it a global look. China is dying to see inflation. They are in the grips of deflation, something Japan suffered for 25 years. So my point is, are all the central banks holding back the world's growth, which is then falling on the shoulders? Look at the housing starts, the building.
Tell me, Steve, are they?
You know, Steve, I don't know. I'm beginning to look at this a little bit more from a global point of view, that perhaps our central banks have detached themselves from reality. As you just highlighted, is AI really moving that fast at a breakneck pace? That is actually, because AI is very deflationary.
It is.
I
very
thought it was interesting. The first Fed guy, Goolsbee, the guy I love, the guy I argue with Howard about often, from Chicago, he did come out yesterday or the day before and actually said 3% looks to be neutral. Well, that's 3 more rate cuts.
And I have to ask, why? Why is it? Why are the change? Why the philosophy change all of a sudden? And that's a big jump from, if you think about from 1 to 2 to 2 to 3, that's a huge jump, right? Because they've said 2% for almost 5 years now, and now it's 3%. That's neutral? Okay. Why? Why is that all of a sudden neutral? Is it because they can't get to 2%?
Probably not.
Okay.
But he's talking the 3% interest rate, Steve. That's what he's talking about, being more of a neutral level, and that's indicating 3 more rate cuts. And I think that they're looking at the economy saying, maybe this economy can grow at 4+%, and it's not going to. Traditional central bank view, you get growth higher, means inflation is on its tail. Well, maybe that's not true anymore. And maybe they need to rectify. So that's kind of really where I'm at here, Steve, as to, how confused I am. But I did want to discuss another big point with you as we can pivot away here. I am watching, if the stock market is going down so much,
right,
and the views are so negative, I want to share a point that I picked up on in this conference I was at, Trade Tech, which brings together the buy side of the marketplace, some of the top minds in the financial community. There was a point that was echoed at a number of the panels, and that is something which echoes right after what you just said about how your business, you're seeing AI coming to fruition at a breakneck pace. Well, social media sentiment, AI models. Oh my goodness. Hedge funds. Okay, understand, in my previous career, I had a lot to do with monitoring, watching, trading mano a mano with hedge funds. And they will use any edge in the marketplace. And I'll go back into, when our Secretary of Treasury, Besant, was with the Soros trading company and took the Bank of England out. Back then, we didn't have social media, but there was a lot of people vocal, getting more and more narratives out there that England couldn't hold the pound, and it broke them. Well, now let's bring it to an AI social sentiment model. It picks up and scores the social media. And right now, social media is highly negative. So what does that mean? Sell. And more social media suddenly follows and says more negative thoughts. And the model picks up, wow, it's even more negative. They sell more. Do you see what I'm saying? This is a self-reinforcing model. It simply highlights the negative views, reinforces it by selling more, and don't get in the way of a hedge fund when these guys sell. And it's almost a I am very, very worried about these models, brand new, probably over the last year, but becoming much more available in the marketplace, that these are beginning to short term. They will not be able to change fundamentals, but short term, they're going to create a lot of damage in the marketplace.
I've been saying the algos are hurting this market more than anything. I've said that more than anything else out there, more than the social media. It's the algos that are hurting the markets more than anything.
And each of these algos is a different model, is a different tool. And I'm really worried about this type of sentiment, indicator, because it is self-reinforcing, and it creates us now. Okay, that's a warning. That's something I picked up on as a global risk manager. But let me bring it home. My topic in this discussion that I was at, this conference, was man versus machine. Where is the opportunity for us? Machines will always go too far. They
always do. They always do. Every single time, the machines always they're outsized positions.
Yep.
Because they're indiscriminate. They literally have no emotion, and they're pre-programmed to make as much money as possible, as fast as possible. And that's the difference, right? I'm telling you right now, we should ban algos. I've said this for a long time, and I still agree with it, that algos are part of the problem. Oh, and they're going to argue and say, well, they create liquidity for us. We've had liquidity for 200 years in the market. Stop it. That's nonsense. I don't mean ban it, like completely ban all algos. I don't think that's correct. And I don't think it should be institutional, or I don't think it should be just retail. I think there should be a level of which you should be able to build it. Just to be able to build any algo to attach to any machine to be able to go to the market is ruining the markets. And I've said that a million times about this market. And guess what? It's happening. Oh, well, the markets are at all-time highs. Yeah, they're all-time highs.
Yes,
but that doesn't mean that we also got all-time high in the deficits too.
I can't agree that we want to ban algos, because each and every one of us, and
we are open now, though.
Go ahead, Steve.
We are open, and right now the markets seem to be a little bit struggling here on the open. But I'm long on Amazon, IBM, Hood, and Oracle. I'm not too concerned with any of those. Looks like Amazon's pushing up. Qs are pushing down a little bit here. Some selling is picking up. I think a lot of it has to do with Iran coming in. As you know, this is all cash market. This is where the kids who can't get it can't trade in the pre-market or the post-market. This is their first chance to get in or get out, and they always pretty much do the wrong thing in the beginning. And I think that we'll see a 600 on the Qs has been right where it's at, but we're seeing it once again holding down here. It's a 5-second chart. I'll pull up a 1-minute chart. Yeah, see what I'm saying? They covered that pop this morning, and look at all that selling this morning on a fairly good day. So I think that they're the wrong side. Yeah, Amazon pushing back up 203 now and a quarter. 203.50 now, and you're already seeing the Qs now pushing back up too as well. So first move is usually the most wrong move. So be careful out there. Yeah.
To your point, Steve, you got to think about it this way. You are a large price maker, and suddenly your order book before the open, suddenly you have 5 times more sell orders at the open than buy orders. What do you think a machine does?
It gets scared and knows its numbers. And it's gonna try to front run you. That's what it does, because they have the ability to do that. That's what I'm
Ooh,
saying, right? That's why it's an unfair advantage.
those are bad words, front run, because that's illegal. But they will try to,
Or spoofing. I'd say them both. I'm going to do both. Yeah.
but they will try to get out in front of the order flow.
And they do. Don't think for a second the Citadel and the big firms are doing them. And I
So-
have no problem with that. That's part of the market. That's part of the stupidity that I don't like, but that's part of the market, and I'm okay with it.
That's right. It's part of the market. Algos are part of the market. Each and every one of us, every time we hit a button, say buy or sell, we are going into an algorithmic trading model. So there are certain type of models that I believe perhaps need to be checked. I think that this is one of the problems for regulators, is that the market begins to move at such a speed, it gets out in front of a regulated environment. And, I think in the currency markets, it is the most automated of all the markets. And that's why, I'm trying to bring some transparency to the viewers here about the type of algorithmic models that are out there, and be aware of these social sentiment models in the AI space. And all you need to do is open up X or whatever you look at, Reddit, and look at all the negative. Oh, I can't believe the market was down. Or how about a perfect example? Earnings come out and they beat expectations on both levels, and the market's down 5%.
Because the social media doesn't always necessarily equate to people that actually understand the markets or understand what's behind it.
So, and these hedge funds with this high technology are going to use that into their benefit. Remember, many of the hedge funds still sit in an unregulated world.
And Amazon now sitting at 204 now a share. That's what I've said this morning. That I like Amazon. The biggest sell-off since 2006 in Amazon, and the daily chart has turned for me. I made a point of that yesterday. I made a point of Oracle now turning down a little bit here, and IBM yesterday was a big sell-off. This is what I'm saying. I'm taking advantage of this craziness that's going on in the market.
And that's exactly, I think, the summary of where I'd end up with this conclusion here, is that this type of marketplace, it's okay. It gives us extreme levels, and that's the point. We need to watch this.
But Steve, as traders, we love volatility.
Yes.
We love this volatility, but
Yep.
it's too volatile.
Yep. But, anyway, that's my Fed spiel, and that's my model spiel. Some of the things I'd like to look at here would be Bank of America yesterday put out a report that the dollar positioning is the most negative it's been in 14 years.
Yeah.
Well, I would apply the exact same sentiment model to the dollar index. Remember, $9.6 trillion trades in one day in the currency market. So these models are super prevalent in this market.
You're still on the Dixie?
Steve, I am. Well, I'm not long the Dixie. What I am long is the dollar versus the euro, the dollar versus the pound. And believe it or not, I'm actually dabbling in the dollar versus Mex here.
Good old Mexi Mex. Okay. All right.
Yeah.
There's the dollar versus the pound, and you're killing it right now. Good old peso. Okay.
Yeah, because I like the dollar. I'm staying away from the yen. I know dollar yen is going to bounce here. It's back up to 153.98. I am looking for the appropriate level. And here's what I'm going to do, just to give everybody my playbook. If the yen gets close to 155, what I'm going to do is I'm going to sell my dollars that I hold in the euro and create a short euro, long yen position, because the new prime minister of Japan, I haven't talked about that since the election being off, that was massive. Sananomics, which is her first name, PM Takaichi, the LDP got 316 votes out of 465, giving them a single party supermajority. When you throw in their coalition partner, JIP, you get another 36. They now have 352 of 465 seats. Anything they want to do, and she's pro-Japan, moving the defense spending up, which is big for manufacturing base. that Japan is a great place to look into investing. I hold EWJ as the ETF, and that's the way I'm playing that. But I really like what's going on, and I will further emphasize why I'm long dollars here, and I'm ignoring these AI models at the moment, but I have my levels very firmly in place. I don't want to see the dollar index get below a 95.55, which was the January 27th. That's going to be my end all on my position. But what I am looking at is the SWIFT, which is the way payments are made in the world presently. Yep. The dollar leads all global transactions by 50.5%, which is the highest since 2023.
20 already back up. I like this run here. Those of you who know I'm long, let me tell you why I'm long Oracle here. You can see it right here. Loving the bottom here. I made this mention yesterday. You can see the bottoms here and the rounding pattern. They pull it right here. This is a big rounding pattern that's happened here. We all know what that means. And I'm liking it here. I'm loving this bottom here. So on Oracle. So I have bought 204.51 now. The highs of the now of the day on Amazon. Oracle now only down 1.15%. So we're still seeing 204.58 now. Now the highs of the day now on Amazon.
And there's your sentiment at play right there, Steve. Look at that move down as all that negative news over the last 2 months of trading. Every day, Oracle, they're going to, their debt levels are going to kill them. But they're involved in every aspect of what this future is.
Look at that. Look at that rounding pattern right there on Oracle. That's why. And look, this was a $340 stock, somewhere around there, $350. And you're buying it now at $150, right? So you're getting a better than 50% off. I understand. I didn't like Oracle, but I'm liking Oracle now. Why? Also the linear regression. The last time we seen this kind of sell off and was back in April of last year. And guess what happened? Boom, right back up throughout the summer. And that's what I'm thinking too. I think we have another run at this again. So I'm loving this bottom.
One of my old school chartists that I learned from a long time ago, and I've been charting since the early 80s, is when you get a double bottom-ish type formation there where you had that last low and then all the way to the left, now you've had a higher low and you've already got the trend line there. What you do is the down move from the top, you flip on top, and that should be where your objective is. So that's got to be, I don't know, what's the move? It's halfway down from the highs. So
right.
That's a pretty long shot, not a day shot. But over a period of time, that would be the objective if this pattern holds.
Yeah, and for me, this is not a trading. This is not one I'm putting in trading. I'm adding to this one as I would talk about it. I had a starter position yesterday, added to it this morning. Probably will add to it again in the next few days as we make this round. We're not quite there, but I like this. I'm making the additions as a normal investment in here. But I do like this. Amazon definitely showing us here. Tick now flat on here on the day here now. Oh wow, the tick now moved up 350 now. So we're seeing some bullishness back in the queue. So as I said earlier this morning, the first move is usually the wrong move. Now we have not seen a rounding pattern in the overall queues yet. We've not seen it also in the SPY as well. There is a little bit of selling here. There could be pull back to about 650 on the SPY. I don't think so. I do think that there is some headwinds now with Iran, but I'm not too concerned about that right now. And let's see. And the other one, I'm obviously, I'm playing IBM on this bounce and Hood on the bounce too as well. So again, same situation we saw here. Now Hood's not all the way down to 200, and IBM selling 1, 2, 3, 4, 5 bounces off of that and right back up. So I like this move here on IBM. I'm also long on IBM. I also am making positions in IBM. So I'm not quite fully vested there yet as well, but definitely liking this. Tick now 318 and advanced decline now positive by 2100. Steve, WTI this morning was at $62 a barrel. Now it's 64.17, up to over $2 a barrel now on Iran. Are we worried about the oil here, WTI?
Not at all, Steve. $64. I mean, we're still coming off of a period where, oil, was sharply higher. It was in the 70s and 80s. So
Yeah.
I think anything below basically a $68, I think is very good for economic growth throughout the world. I do think Iran, that's going to be a problem. I am concerned that we still have 1 month left to my undecisiveness, where we could see both sides of the market trade. But I am worried about the downside. I am carrying a long VIX trade in UVXY because I do think there's two things on the radar that are not getting off. One is Iran. And as you said, you don't put an armada off of its coast if you're not going to use it. We've seen the demonstration in Venezuela. And I think the difference here is that you've got religious zealots in charge, and they're looking, going, "Who are you, Trump? I'm answering to the guy up above me." And I worry when it's religion, because we've been fighting wars in religion for thousands of years. This is not something that's going to go away easy. So that's one. I do think you could see a spike in oil on that. The second is the Ukraine, with Zelensky basically, turning and holding on to this "we're not ceding land" type thing. I'm sorry, Mr. Zelensky, you lost. And if the world says,
what is that saying to the rest of the world when Russia, a dictator, can just walk in any country and take? What is that saying to the country? To us, I mean, to me.
Okay. Yeah, that's, again, back to my models and social sentiment. That's the prevailing logic, that the dictator took over land. But if you look back in history, the two provinces that he did take over now, and I'm not talking about the island he took over. That's, for a warm water port. That was something that, what was that happened under Obama should have been, taken care of more decisively. But the two areas of land that he took over have over an 80% Russian, population. So the fact that we say, if you look at history and look at the real facts, the Ukrainian government was, in there fighting a war in those provinces prior to Russia coming in to an 80% population of Russian people. So I'm not going to look at who started what. What I am saying is end the war. And here's my big worry right now. I think United States is very close to saying, all right, you're on your own. See you later. And that's going to create a bloodbath, because there are three countries that are sitting at the negotiating table: Russia, Ukraine, and United States.
Yeah.
Europe has been pushed out. Now we're representing NATO and Europe, but there's a reason why Europe is pushed out, because I'm very concerned about, the politics that are going on, and perhaps people are hoping that this war goes on forever. I don't know what the material benefit would be on that, but we want to end it. And the Ukraine is not getting enough pressure from our European allies to end the war. So I'm getting worried the United States turns around and walks away, in which case the floodgates open, and, there's going to be a horrific loss of life in Ukraine.
That would be very bad, because they've already had loss of life already.
I think, when people talk numbers, if you take both sides, it's got to be in the millions. And this is an absolute travesty, that there is such a disregard for human life over what? Over, territory that was mine, is mine. No, it isn't. Yes, it is. End it.
Seeing a little bit of selling here in Amazon on that 205 number. Back to this is what I'm saying. Like, this seems to be just nonsensical selling. That was push up there, and then all of a sudden this massive. You can see where the buyers and sellers are there. That's what we're saying, Steve. Like, it's just when it's sell, it just boom, it just hits, and it's like, it's crazy, and that's the algos kicking in.
that's the algos kicking in, and that's everybody, again, a sentiment. That's everybody saying Berkshire Hathaway sold what? 75% of their, yeah, that's been done over the last month or so, and now they're bringing it public. So we call that, you sell the rumor and then you buy the fact. The fact is now they've announced what they've done. You should be looking for levels to buy, as you have.
And that dip on Oracle we picked up. You can see where the buyers are stepping in. I love that. That was good.
Yep.
Yeah. Look at that. Look at that dip on Oracle. That's what I'm saying. I'm making positions where every time it's a sell-off, I'm like trying to take a little bit. Spain says that they're the first to enter the race for Lagarde's succession at ECB.
Yeah, she's done next year, so she's got plenty of time. But I don't know if you saw this summit that just happened, the defense summit or whatever they called it, which Rubio spoke very eloquently about the.
I thought he did a good job. Yeah. But they were laughing at him too, though. Let's be honest.
They did give him a standing O, though. So
they did. Yes.
And you can divide this however you want, but I would always come back to Germany, the largest of the countries in Europe, and their new Chancellor Merz, who came out at Davos in front of the European crowd and the elites and said, Europe has failed. And Germany is going to change. They are definitely going to get much more pro-market. And I'm worried the old guard, which is Lagarde, these people are missing it. And watch out for the Italian former ECB head making another comeback.
Ooh. Who?
That would be his name had just eluded me, Steve.
Okay, that's fine. Yeah, I mean, I can't see any of the old guard coming back here.
Well, this is the guy who published a paper over a year ago that laid out all the fundamental changes that Europe needed to make, and they didn't make. So he revisited on the second anniversary of his speech. And that has not happened. So this is a businessman. Gee, Steve, you're going to have to help me out there.
That's okay.
Former ECB governor before Lagarde. And he was from Italy. And he was the former...
Oh, you're talking about Mario Draghi, right? Mario Draghi.
Mario Draghi, yes.
Gosh, how can we forget that one? Sorry. Yeah.
Now, he is very much in line with what the Germans are saying about, taking in. I am worried that the old guard in Europe, though, when you begin to break down this Europe, India trade deal that was signed, one of the little things that seems to have gone unnoticed was opening up immigration from India to Europe.
Right.
And you've got 450 million people with the ECB using their models projecting growth over the next 2 years through 2028 to be 1.4%. Where are you going to absorb all these people?
They're not.
Given the Rubio speech and the Trump speech at Davos about Europe losing its identity. This is a major concern that I think is going to have to be dealt with in Europe. When I read this about this trade deal, I'm back on my short euro kick here again, but I want to give it a little breathing room. The dollar's not going to make a move overnight. Right. It is making a steady move. You've got the Dixie right now at 97.45, having closed last week at 96.88. So 96.88 would be, something I want to keep very close as a short-term indicator that, maybe this dollar surge is going. But sell America, dollar devaluation, all these narrative themes have been picked up by these AI social sentiments, and they have driven them, the dollar in particular, to a 14-year short position record.
There seems to be a lot of selling on the Dixie at 97.50. Are you worried about that 97.50, 50, 54, that area right in there?
That is a significant zone, Steve.
Okay.
I'd be perhaps paying a little closer attention. I have to, a 97.70, but I do have that level on my chart as kind of like a speed bump, initial speed bump. I do think we have enough momentum here building that we can take this out. There's a lot of speed bumps all the way up in the dollar index. 99 is going to be, really the big one. 99.40 is going to be another big one. So a slow, steady move is what I'm looking here.
Oracle now just turned green here, folks. For those of you who are paying attention, listen to me. Oracle now up 0.5% now. As the markets have turned greener here, Dow up 140 points now. The Nasdaq up 85 points, and the SPU's up 0.28%. So it's and the tick now up 506 with the advanced decline now at 25.59. So a much more positive day than we thought was going to come out this morning. Then I think, considering the Iran and everything else, the narratives of South America are overdone. Steve, we talked about this.
Steve, you pointed out the manufacturing numbers today were positive, and that's two in a row. I think so. We've highlighted the algos. Well, let's take the other side to the algo. Once they've hit their extreme, they begin to reverse because they look at the next price. If I'm short Oracle, Steve, I'm just going to throw numbers out there, at 150 when it was 300 and it's suddenly 151, my model goes, time to reverse, and they begin to take back. If the next price is 152, the acceleration of the turnaround increases. So these models are machines, just like a car you drive. The more you push down on the gas, the faster it's going to go. And that's what you want to be looking at when you look at charts in today's environment, understanding that machinery is behind a lot of these extended moves. Now, having
just
said
saw
that,
flying across the screen here, Tesla puts have been, we've had a chatter saying that someone has bought November 20th, 26 this year's puts, 2,000 of them, 2,035 puts, the 410s. 41030s was spot. They have bought the huge volume. For 2028, they're buying 600, the 630 strikes, but the 255 strikes. This is big numbers here. 205 now on Amazon, as Amazon's still pushing higher here on this move here. As the 604 now up on the tick now, we are moving higher here in the markets. Congrats everybody who was paying attention and listening to what we're saying. We're not just looking at charts all day, folks. We're telling you what's really going on. So. Yeah, and I think that the overblown IBM now up in green, and Hood, Robinhood now also pushing higher here now too as well, and Oracle now up by 1%. It was down by 2 in the morning, right? So the narrative that was let's sell everything, go away is just not happening right now, Steve.
Right, and that's it. That's why my expertise was studying price. I watch price. I look at charts. Sometimes, if you really want to get into the weeds, take a chart you're looking at and you suddenly go, look at this daily chart. I see a rounded bottom, as you have. Break it down into a minute and watch the minute-by-minute action. Because in a minute-by-minute chart, there you sometimes can see an obvious machine, an algo at work. Because
see, what talking about the volume here, you can see the volume picking up as going into it. That's machine movement. I'm asked constantly, how do I know it's an algo? And that's telling me, right, that look at this 1, 2, 3, that 3 bars right there. That's algos. That is machines. Because if it's like this, where it's 1, 2, 3 is kind of even, that's people trying to make decisions. But when you're seeing algos, will topple algos on top of algos. That's what they do. That's how I kind of can see it. That's very good, Steve. Thank you for glad to point that out to people.
Yep, it's all in the price. Price will tell you everything. Or as I would say to a table of PhDs, I would say data don't lie.
Data don't lie. I mean, and I think that's what people don't understand a lot of times, is that it's not always just charts. It's not always, if someone tells me Charts. Or it's news. Oh, good, we got the news for anybody else. Well, that's great, but that doesn't really help either. That's a quick trade. You're not getting the full picture. I think you have to have the full picture in order to make better decisions, and that's what we do here at Quasar Markets. Get a much better picture, and that's why I'm up so much this year. Robinhood now up 1.5% now on the day here.
There you go, Steve. You know what you're doing? You're picking up the hood and looking at the engine. You're beginning to offer transparency to how the mechanics work in the marketplace. And it's great. I really think that, you're on to something, and I think you can see by the following that you're getting, you're bringing a lot of transparency to the market.
Yes. All right. We got about 2 minutes now, top of the hour. Steve, any final thoughts here before I let you go?
Yes, Steve, I think there's still a lot of big events out there, geopolitical. I think, as you've highlighted all day, the Iran situation, I don't see that as a long-term. I think it's a very short-term event, but it will have effect. But I'm really worried that this Ukraine-Russia thing may enter into one more phase before an eventual peace deal is reached. So I am playing with a defensive hedge on being long in the volatility. I like the UVXY as a great volatility play against my overall long position. I'm not going short. I'm not playing the short side of this market because.
Steve, where are you long on the UVXY?
Steve, I've been buying it for the last 2 weeks.
Okay, all right, and I like what Steve's thinking here because let's pull up a daily chart over the last 2 weeks. I like what you're doing. You're averaging in, and here's what Steve's seeing. He is seeing, again, that rounding bottom that we've seen in a lot of things here too as well. But you can see what he's talking about. See what he's talking about? Like, he's been buying it down here over the last 2 weeks. Every little bottom here. I love this move here. This is protecting it.
And I trade part of the position last night. I believe today was going to be an up day, and I'm still holding that. So I did sell some of that out. But I will be back fully into my hedging position. I still am in it, but I trade part of it, and I will be back in it for Thursday and Friday because I'm worried of, again, weekend risk. It's real, and we can't trade on the weekends yet. Pretty soon we will have 24/7 trading, but right now you don't. So that's 2 days you have to sit with your hands in your pockets. So you need to be prepared for
hands in your pockets, sleeping with the piggies, as we always say, right? Oh my God. Good old memories of the old days. Okay, Steve Flanagan, I will see you back here on Friday. It's going to be a big day here Friday. We'll talk about that here in the next couple of days. We have a huge day on Friday, I should say. I'm sorry, I should probably say it's a huge day. All right, for those of you Quasar Markets Live, again, Steve, thanks for being part of this. We're crushing it now. We're in the final stretches of the new software, the new platform, and the new look. Hopefully, everybody get ready for that. Be super excited about that. But for those of us at Quasar Markets Live, thank you so much for watching, and we'll see you right back here.